Anis Lahlou, you're a fund manager for European equities at JP Morgan. With a turbulent time behind us, markets are still nervous. Which topics concern you the most?
Well, we had an extraordinary summer. Commodities, price drop in commodities, slowdown in the global markets, slowdown in Chinese markets, and slowdown in emerging markets. Economies generally have been at the forefront of people's mind and will continue until we know in Europe what is going to be the impact on the Eurozone and the broader Europe. So that is something that we're watching very closely.
The broader European equity market in terms of Euro Stoxx 50 gained more or less 1 to 2% this year. What do you expect for the rest of this year? Do we close positively, negatively?
Well, the outlook for Europe remains positive as a region, but obviously Europe is part of the global economy, and what's happening to the global markets and the slowdown in the economies in the Far East, in China, in emerging markets will have an impact, clearly. So we remain constructive, and also the fact that the ECB or the ECB rhetoric has been extremely clear on this point is also reassuring. Let me remind you, the ECB late in August has been quite clear, saying that it stands ready to act in the case that the global economy threatens its inflation targets, and these inflation targets are not where the ECB wants them to be, so the door is open for more easing, and that is certainly very supportive for European markets generally.
A big topic as well was the Volkswagen so-called scandal. Do we experience a new era for car makers?
Certainly, there is the rate of change in the auto space has accelerated. What we have with Volkswagen is an automaker that is facing 18 billion worth of fine in the US. And the stock market has reacted very harshly, wiping nearly half of its market cap, worth some 40 billion euros. So Volkswagen today trades on 5 times earnings. There is clearly the territory for deep value investors. So where do we stand with the rest of the sector here? I don't think that this is the end of the negative news flow around the sector. First of all, we know that there is a fine coming from the US. There may be fines from other regions in the world. Second, we have an issue of reputation with regards to Volkswagen that is specific to the company, but it might imply that the broader German industries may have an embarrassing situation to handle as well. And finally, probably most importantly, what we have here is a situation with rising costs in an industry that's going to be facing increasing regulation. And we've seen what regulation can do to the banks. Here we have an increased focus on regulation with the autos. We're going to have more testing in the real world versus the laboratory, and we know that's going to be harsher on the autos. We're probably going to have more encouragement for phasing out of the diesel engines and going into the hybrid, and that's going to be very heavy on the cost base for the automakers. So I don't think we're at the end of a negative news flow in this sector, unfortunately.
But if you look at specific companies, which stocks we have in mind from European car makers that are still attractive?
Well, what you have to look at the news flow that you had from the sector, and there is some positive news because all European car manufacturers, without exception, have come out to say they don't use defeat devices. So that's reassuring. But like I said, we're going to be facing increased regulation, increased costs going forward. They're going to be mostly on the negative side for the autos. But you can imagine that auto components are likely to benefit somehow because they will provide these components that are so important into transitioning from diesel to less polluting engines. And you can imagine that also people who manufacture the semiconductor components will be on the positive receiving end of that regulation trend.
But could you name some of these companies who would profit?
Absolutely. Some of them are actually German. Continental is an auto part manufacturer, will benefit from that. In France, France has many auto part manufacturers that will benefit from that, like Valeo, Faurecia, Plastic Omnium. The degree to which these part manufacturers will benefit is unclear because we don't know how much they will be hit on the volume and the lost opportunity from Volkswagen, for instance, versus how much they benefit longer term from increased regulation and increased need for the components that they produce.
When we look at European countries, can you make a connection between the economic situation in a country and, for example, number of interesting companies?
Yeah, obviously we make that connection. So the Eurozone, as we mentioned, is a region that's set to benefit from the ECB positive action and positive support with QE. So we like the Eurozone as a region. Within the Eurozone, we're going to focus on countries that are more geared to benefit. And these countries are typically going to be the countries that have put a lot of effort to reform ahead of the QE. Spain is a good example of that. If you look at Spain, Spain entered the bailout program in 2012 and started reforming its labor market early on, and the benefits are showing already. So Spain is the only country in Europe and probably globally where there is an acceleration of productivity in the after-crisis period, and that is phenomenal in terms of the growth it can drive going forward. So Spain is a country that we like very much.
And if you bring Switzerland into this topic, where does Switzerland stand? What's the future of Swiss companies?
Yes, well, on the other hand of the QE, obviously versus the euro versus the dollar, the Swiss franc is strong. That's not going to help the exporters. It's not going to help them unless they are positively geared in their business to Eurozone region, for instance. That's the case for Adecco. Adecco is a staffer, and as a staffer, 65% of its earnings are coming from the Eurozone. A quarter of its earnings are coming from France. So Adecco will naturally benefit from that positive trend that is happening in the Eurozone and will benefit from the recovery. Also, if you are a Swiss company that is focused on niche markets where you can raise prices and the Swiss is not going to impact you because your pricing power is stronger. That's the case of Lonza, that is benefiting from a niche outsourcing market in the global pharma industry. That is going to be positive for you. So these are two stocks, for example, in Switzerland that we like.
A third company you're investing in your funds is UBS. A big topic for banks is regulation. Which banks do you prefer for the future?
Yeah, we focus on banks where we have visibility, and that visibility will come on from two fronts: visibility on the capital and visibility on the earnings, and that's the strong signal there will be given by the ability of company to pay dividends. So visibility on the capital, we want a strong capital that is strong enough to face the future increased regulation, but also gives you a certainty of earnings by paying dividend. UBS has entered into restructuring early on, much earlier obviously than Credit Suisse, focusing on its core business, asset and wealth management, and we view that very positively, and that is why we hold UBS.